Deven Choksey of KRChoksey now joins us on the show. Deven, afternoon. Any thoughts on IndusInd Bank? It's fallen quite sharply post its numbers. Would it make it attractive, or your thoughts? The call that you have now.
Yeah, Rima, good afternoon. Well, I think the very reason that if the stock has rallied before the result in anticipation, possibility of after the result this rally fizzling out remains extremely high, and that's what probably has happened for this particular counter. Overall, the results are in line with expectations, and more or less suggesting that the bank is well on the track. Earlier years, they were having a situation of writing down the assets, and as a result of which profit would always remain subdued. This time around, that is no more a case, and I guess the last couple of quarters they've been showing a good amount of strength as far as the non-performing asset write-downs concerned. On the other side, the credit book is expanding. Corporate lending side is expanding, and that is giving a good amount of feeling that yes, going forward, most of the banks are likely to see better AUM growth due to the corporate sector picking up now. Along with that, particularly for Indus, the automobile segment in the commercial vehicles, the traction is being seen. So all in all put together, on one side, higher amount of growth on the lending side. On the other side, the balance sheet is remaining, absolutely clear as far as the NPAs are concerned. And better management of liability side, I would think that the performance likely to sustain going forward.
I think the last point, Rima, the liabilities on IndusInd Bank, that seems to be, now it's almost impossible to exactly say why is, pinpoint and say, well, this is why the stock is correcting. It could be, of course, pre-positioning getting unwound, but all of that usually plays out in the first, when markets open, right? Whoever is bought or in anticipation, they sell out and it clears. But what has happened is that on the liability side, savings accounts are down 6% quarter on quarter. So it looks like, a couple of, I don't know if this is, distributed amongst lots of accounts or a few large accounts, but on the CASA front, the savings part of it, that is actually down about 6% on a quarter on quarter. That is something which, IndusInd earlier also, after COVID, if you remember, the problem was on liabilities, right? We had, if you remember, the conversations with the management, it was always about whether the liability franchise is strong, whether deposits are, you're able to raise deposits, etc., all of that. But I think this is one of the reasons, as I said, not maybe the number one reason, but maybe there are a few other things like positioning, etc., which are at play as well. Deven, the other one is Canara Bank. Staying with financials, came out with numbers, look super strong. What would you do with it?
Yeah, Prashant, the numbers are strong, and the same point applies out here as well. The corporate side of the loan book is growing, and this is again giving an advantage to many of the banks, including Canara banks and many of the public sector banks likely to follow with results. Going to see the same kind of a reflection into the results. The other part of it is, of course, about 460 odd crore is basically being reflected into the profit, which is a higher sum of profit, is also due to the reversal in the tax and the tax credit taken by them because of the new tax regime that they have followed. So that could be one-time exceptional amount, which is basically appearing at the bottom line. But all in all put together, the growth part of the business remains fairly convincing, and that is giving me good amount of comfort. Those banks which are available currently at a price to book which is significantly at a discounted rate, I consider they're likely to get re-rated, and some of the PSBs including Canara Bank among others should get re-rated going forward.
Okay, all right. Just a quick check on the market. The 17,550 call, 17,550. There was a massive open interest build up out there. Now we're nearing that level. I'll tell you what, if we can get past the 17,560 odd, because the premiums are on 10, 11 rupees, that could lead to a further bounce. For the time being, the bears are managing to hold on to that level. You've seen a sharp uptick, but it's meeting some bit of resistance at around the 17,550, because we've just got around 50 minutes when this expiry gets wound up. So keep an eye out on that mark. But we've got a lot of numbers that are coming in there. By the way, Bajaj Finance has moved to the high point of the day. We'll be getting those numbers in just a bit. But Asian Paints, the numbers are looking a little bit disappointing. Mangalam is standing by to run us through the fine print. Mangalam.
Well, it was a top-down miss that came in from Asian Paints, and it comes in directly from the top line. And it so appears that the volume growth of the company this time around has been 10 to 11%, and this is lower than street expectations of around 14 to 15 odd percent. Importantly, gross margins as well has declined quarter on quarter. Even after the price hikes of almost 17% that the company's taken over the last 1 year, the improvement year on year is just about 100 basis points. So that's telling you that even realizations were under a tad bit of pressure. The overall revenue is just above 8450 crores. The street was working with a number of 8900 odd crores. The EBITDA coming in at 1219 crores. The street again was working with a number a little shy of 1600 odd crores, and that means that the margins came in at 14.4%. The company's comfortable band for margins was 18 to around 21 odd percent, so it's below that as well. And the net profit as a result of which was almost 20% below street expectations. Quarter on quarter as well, there has been a decline in both the EBITDA as well as the company's profitability. And the company said there was subdued demand conditions impacted by extended monsoon. So to that extent, it will be important to see what they do in the third quarter as well, because, large parts of the country did get a fair amount of rains even in the first few days of October. And secondly, we need to know how the festive season has performed and whether there will be some sort of margin improvement in the second half of this year as well or not. So those are a bunch of things that we'll be watching out for Asian Paints. But for now, it appears that the second quarter volumes are a miss and the overall numbers are a miss as far as expectations are concerned too.
Okay, all right. Mangalam, thanks a lot for that. Well, Deven, what do you do? The numbers are lower than what the street was working with, as Mangalam told us. High quality name, you have crude oil prices as well that have cooled out, and it's a play on the housing theme. How would you approach the space?
So Nigel, I think in companies like Asian Paint, where demand scenario remains extremely promising, and I think it's also showing, I think, robustness, I think, even in the current numbers. I would think that I think it is safer not to look at quarterly results as far as I think the margins are concerned. Because in this quarter too, I think what one has seen is that due to the pipeline inventory of higher cost, they have basically affected the margins of the company, even though they have increased the prices and I think they could pass on the prices to the customers. Still, the high cost inventory has affected them. Overall scenario looks, I think, pretty convincing. On one side, housing demand is growing at a steady rate of growth of around 20% plus. On the other side, I think the consumption power, I think, in the hands of consumer is, I think, extremely distinctly strong. So the industry like paint, I think, would definitely see the demand scenario remaining upbeat going forward. Company like Asian Paint, I think, who has been managing operations reasonably well all these years, I would think that I think this company probably would get re-rated. If at all, I think this stock price comes down in hurry, then probably I think it would get re-rated in time to come. Overall opportunity is, I think, on a higher side as far as I think the investment is concerned.